Hey guys, what's going on? Jeff here, and in today's video, I'm going to explain to you 3 different scenarios about where Bitcoin might go next and why I think that each one of them is actually very bullish for Bitcoin. Will Bitcoin hold $100,000? Will Bitcoin hold the 50 weekly simple moving average? We have all kinds of different questions that we need to answer today, but I think that when you hear the answers, you're going to be quite happy with what you hear. I personally think that the bottom is close, if not already in, and today I'm going to break down exactly why I think that. So without much further ado, let's go ahead and dive right on into it. Bitcoin has been going through a major correction ever since the all-time high at $126,000. We have now dropped a cumulative 21%, and the bears are very much frothing at the mouth over on X. Many of my friends on X are very bearish. Many of them are calling for much larger corrections. We have called since about the 11th, I think it was about the 12th of October, right over here, for Bitcoin to drop to between $94,000 to $100,000. We've made that call well over 100 times within the last month on the videos, on stream, and on X. And I'm not quite sure that we're done with that call, so we're not ready to say that we have reversed. Today, we're going to talk about whether or not the bottom is in and what the future will look like. So let's get started. On the hourly chart, you can see that Bitcoin has managed to drop all the way down to $100,000 and below $100,000 a grand total of 3 times now. We dropped below $100,000 briefly here and here on Tuesday, and then we also dropped below $100,000 yesterday on Friday. And as we speak, Bitcoin is actually in the process of setting a descending triangle pattern based on this downtrending level of resistance here, connecting these 2 levels, these 3 levels actually, right here, here, and here, which could potentially point Bitcoin even lower than 100K. And so the question becomes, is Bitcoin going to hold 100K? Let's talk about the 3 major scenarios that I think are going to play out. The first scenario is that Bitcoin manages to break through this fair value gap. Now, a fair value gap is basically created when the market just flushes straight through a level and leaves a large number of orders behind. And so what you end up seeing right here is that there are a lot of sell orders up here that have not been triggered because Bitcoin drops straight through so fast. People kind of place sell orders as the market was dropping, and those were not able to be filled. And so at this point in time, if Bitcoin were to rally back up to 105,000, then a lot of those sell orders would be triggered. And that's actually something that can attract the market into this zone. Again, this is called a fair value gap. We find it by finding a low right here, a high right here, and then we notice that the price just kind of falls straight through it. A lot of times in a market, that'll look a little something like this. The market is ranging, and then it just kind of shoots up, and then it does this number. This would be what is known as a fair value gap. There's a lot of buy orders down here, so the market in the future may end up dropping back down and backfilling that before continuing even higher. This is the kind of move we'd be looking for. So there is a possibility that Bitcoin could rally up to like 106,000, correct, and fall back to the downside. But what I'm really looking to see is whether or not Bitcoin can break through this zone. There's every reason to believe that Bitcoin could rally up to 106.5 because there's probably a lot of sell orders up there. But the question is whether or not Bitcoin can actually break through it. Generally speaking, on a fair value gap, if you're able to break through the middle line of the fair value gap, it's called an FVG, which for us would be approximately $105,600, then that is where you've probably gone through the majority of the sell orders, and then you're actually most likely going to break that zone. So our first scenario is that Bitcoin manages to rally into this fair value gap at some point over the next few days, breaks through it, and then we're able to go significantly higher. So that would look a little bit something like this. Bitcoin could very well rally up towards 106, have a correction, and break through it. If we saw a breakout like this, and then we also saw a breakout above, for example, a downtrend like this, that is where Bitcoin would just have probably already bottomed at approximately $98,500. That's scenario 1. You go back towards all-time high. Now, that one's pretty obvious, but the second 2 scenarios are actually a little bit more, actually, I'd say a lot more interesting. And the second scenario is what happens if Bitcoin does drop down here just briefly below 100K? What happens if Bitcoin drops down to 96, 97, 98, and it actually bottoms at like $97,000? Well, this is where we need to kind of analyze 2 major different pieces of data. The first of which is the liquidity chart over here, where all the liquidations are. And then we also need to talk about something called an RSI divergence. Let's talk about the RSI divergence first. How does RSI divergence happen? Well, the way that RSI divergence happens is that you see the RSI drop, and it does something like this. So you have the price, P up here for price, and R down here for RSI. What happens is you see a major leg first, and then you see a smaller leg second, which puts a downtrend on the price. But what happens here is that this leg dropped the RSI very deep, but this leg didn't move the RSI very much at all, so you have an uptrend on the RSI. That is the exact movement that causes an RSI divergence. This is a textbook definition of an textbook example of an RSI divergence. Well, it's going to be very easy for Bitcoin to put into play, for example, let's say a 4-hourly chart, or maybe even like a 12-hour or a daily chart RSI divergence here, because Bitcoin dropped so aggressively from 111 down to 98. Let's probably look at the 4-hourly. With Bitcoin having dropped from 111 down to 98, RSI got so massively overextended down at 22 that unless Bitcoin just flash crashes down to like $88,000, you're probably going to have a higher low on RSI, which means that most likely if we were to drop below our current bottom at 98 down to say 96 and we hold, you're going to build a major RSI divergence. And what happens there? Okay, you drop below $100,000, you spend 12 hours down there, 24 hours down there, 36 hours down there. Everybody is like, wait a minute, that was anticlimactic. I thought if we broke through 100,000, Bitcoin was going to immediately drop down to $5 a coin. Doesn't happen. Okay, well, if that's all that breaking 100,000 is going to do to us, then I guess we'll just go ahead and buy a $96,000 Bitcoin because that's pretty bullish that we didn't just fall straight through the floor. That's actually what the market has been thinking the last 2 times we dropped below 100 is, wow, that was anticlimactic. I thought when we broke 100K, we would just flash crash. And the reason that you're seeing that is because we are right now in the inverse of what we were doing up here. Up here, we were following an uptrend, and when we got to the top of it, everybody just thought the market would keep going on forever. But as usual, you want to counter trade what your heart tells you. You want to counter trade what the sentiment tells you over on X. And right now, Bitcoin is similarly right here at the very bottom of a downtrend, just like this, right? See? Right here at the bottom of a downtrend, your heart tells you, oh, Bitcoin's going to die. It's going to go down to 75,000. And yet, the bears are starting to seem exhausted. So first scenario is Bitcoin manages to break through this fair value gap right here. And then that's our technical confirmation that the bottom's in and Bitcoin goes higher. Second, and a little bit odd scenario, you don't see this very often, but it definitely does make sense here, is that Bitcoin crashed so hard over here that if it just drops down to like 98 and holds, then you're going to build a massive RSI divergence on every single time frame, and then that would probably send us a rally as well. So in other words, if Bitcoin dropped down to 96 to 98 and we didn't go below, I'd say like 95, in my opinion, that's actually extremely bullish for Bitcoin because it's going to paint that big RSI divergence. By the way, why would that happen? Well, if you look at the liquidation data over here, this is why I had this up. If you look at the liquidation data over here, over on CoinGlass, you will see that the vast majority of these long liquidations are not here at $98,000, $97,000. The major bulwark of them are at like $88,000. If you only drop to 96, you don't have the long squeeze that you need to drop Bitcoin down to the CME futures gap. So it's really possible that Bitcoin just grinds down below $100,000 for a few days, and then it doesn't actually end up having a flash crash. You just build the RSI divergence and you go from there. Okay, so that's our second scenario. Second scenario is Bitcoin drops just a little bit below $100,000. You build an RSI divergence because RSI is uptrending on its bottoms, price action is downtrending, and then from that point in time, you don't need much of a bounce to break through this downtrend right here. You could end up doing something like this. Let's see. You could end up doing something like this, kind of charting down here, and then you end up rallying, and then there's your RSI divergence. By the way, historical precedent, this has happened before, and it reminds me a lot of what we saw in 2021. You saw massive RSI divergence. Now, it's on a longer time frame. You saw massive RSI divergence with price charting lower here in 2021. This is the previous bull market, right? There's your context. You have the price charting lower, but when you zoom in here, you actually saw RSI. We just kind of expand this a little bit. You saw that RSI was charting higher, right? And so Bitcoin ended up going through a bounce, basically because RSI divergence is nothing more than telling you that a certain faction is running out of steam. That's just what it is at the heart. Okay, so again, third option. Third option is Bitcoin drops below $100,000 a third time. People consider that a third break, and Bitcoin picks up steam and it catches a little bit, and then you see Bitcoin just dump very quickly. Let's say that happens because there's all this FUD about the 50 weekly moving average, right? Everybody's freaked out that Bitcoin's going to drop below the 50 weekly moving average, discounting the fact that the 100 is right there too at $82,000. Big whoop. We went down to the 100. It's really not a big deal. Let's say everybody freaks out because the candlestick closes tomorrow below 102 or 103, and then we drop down very quickly, and we drop down towards 88. Guess what we did? All we did is we hunted liquidity at $88,000. You hit all of those long liquidations down at $88,000. And what's the worst that happens? The worst that happens in this third scenario is that Bitcoin flushes out to a huge level of support, which you can see right here, is the 0.618. Pull a Fibonacci off of this entire run. What's your worst case scenario? Your worst case scenario right now is Bitcoin goes and fills those liquidations, and guess what it did? It dropped down to $90,000, which is the 0.618. 0.618 Fibonacci. That is a healthy correction. We've got to remember technical analysis. A drop down to the 0.618, which in our case is $90,000, is a healthy correction. Seriously. That's the exact same depth, a little bit deeper, but close to the same depth of the correction we saw here. It's also a similar depth correction to what we saw here. Market dropped down to 50, briefly wicked down to 0.618. These are not the kind of corrections that you need to be afraid of. And by the way, that Fibonacci analysis actually gives us a lot of confidence to say that 100,000 will probably hold, because the last two corrections only dropped us down to 0.5, and guess where the 0.5 is? It's at 97,000. So Fibonacci analysis would actually give us a lot more confidence in either the first scenario, which is that we've already bottomed, or the second scenario where we just drop back down towards like 97 to 98, and we just kind of stagnate there. And then from there, you end up having a bounce. Here's the other thing you need to consider. Everybody's freaking out about the 50 weekly moving average breaking. Well, guess what? The 50 weekly moving average doesn't break because one candlestick closed below it. We saw one candlestick close below the 50 right over here in this bull market, in this previous bull market. And by the way, let's not forget, when Bitcoin sat and rode on the 50 weekly moving average for 2 months, and then because COVID happened, we dropped down to the 200 weekly moving average and then bounced and went on a massive bull market. Markets are not always as simple as we have to hold this moving average or else the bull market is over. It's not that simple. And so you guys that are not technical analysts, you need to back up a minute and you need to be careful, because it's really easy to look at one technical indicator and say, well, if this one thing happens, then the whole market's over. It's a lot more complicated than that. It's a lot more complicated than the 4-year halving cycle. It's a lot more complicated than the 50 weekly moving average. What it boils down to is sentiment. At the end of the day, that's what's driving buys and sells. That's what's driving the bid and the ask, is the sentiment. And the sentiment right now has very much transitioned away from doom and gloom, everything's dying, to maybe that was a bottom. There's not a lot of confidence that it was a bottom. There's a lot of people asking themselves whether or not it was. And so we are very much in a high probability zone that a bottom is either where we are right now or within $5,000 of where we are. If we start breaking below, I'd say like 97,000, that's when you start saying, okay, we're going to 90 to 92. That's where we would start to say the bottom end of our prediction zone, which was 92 to 94, would come into play. And you're looking at that point, maybe seeing a wick fill the semi-futures gap down at $92,000. And there is no textbook anywhere. There is no law in scripture that says that Bitcoin cannot bounce off of 92 and continue the bull market. There's just not. There's just no reason to believe, in my opinion, that you're about to see a massive bear market. Of course, the 4-year halving cycle is not invalidated until it is invalidated. As I've always told you, and as I will always tell you, you need to be prepared for a bear market at any point in time. At any time. You need to be prepared for a bear market, because the whole point of building a financial portfolio is to protect yourself and the other people around you that are going to benefit from it. So you should always, at all times, be ready for a bear market, because one could happen anytime. I mean, you could have a nuke go off somewhere and send the whole market into a bear market. You need to be prepared for these things. That said, I do think that it's relatively high probability that the bottom is either in or close, and I also think that it's relatively low probability that you're going to see a 70% bear market next year. Maybe we revisit $75,000 for a little while, but guess what? That's not a technical bear market, because it's only a 40% drop. People talk about, oh man, Bitcoin went into a bear market because we dropped 20%. That's the stock market's definition of a bear market, not Bitcoin. Bitcoin has gone through 20% drops so far in this cycle, at least. That's just as many as I can think of off the top of my head. There's probably more. This is not a technical confirmation of a bear market. Everyone who's trying to FUD you out is doing it a month too late. Talking about bearishness was what we should have been doing up at 126. Right now, what we should be looking for is a market reversal to the upside, because other than the fact that the 4-year halving cycle has just so happened to be true so far in the history of Bitcoin, there's actually really not many technical indications that Bitcoin is looking at a massive bear market. So those are my 3 major bottoming scenarios. I would love to hear your opinions on those in the comment section down below. Where do you think Bitcoin's going to go? Do you think it's about to bottom? And do you want to learn more about technical analysis? More importantly, do you want to learn more about trading? I have something that I'm working for you, and it is a trading course. It's a little miniature trading course that I'm going to be giving to you guys free of charge. I'm really excited for this. Cannot wait. I already shot the first video in it. It's going to be coming out hopefully in the next couple of weeks. And the way you're going to get access to this free trading course is by signing up for Phemex. If you guys have not already signed up for Phemex, all you got to do is go to the link in the description box down below, sign up, deposit $100 onto Phemex. You keep the money. You're not giving Phemex the money. Just deposit $100 into the wallet on Phemex, and I will give you this trading course for free when it comes out. Now, like I said, I'm looking at the next two weeks for it to come out. It's going to be 5 videos. So it's going to be a really good course breaking down one of my favorite trading strategies. I'm going to show you exactly how it works, and we're going to go over all of it. So if you have not already, make sure to sign up for Phemex with the link in the description box down below. They've taken great care of their customers over the years. During the 10-10 crash last month, people were taken very good care of. People's stop losses got triggered so they didn't get unfairly liquidated. You didn't see a massive scam wick. You didn't see anything like that. Of course, the market wicked. The whole market did indeed genuinely drop, but you didn't see just the bottom fall out and it dropped down to like 30,000 like it did on some exchanges. Instead, Phemex took very good care of their customers. They were completely up. The exchange ran perfectly fine during all that time. So if you're looking for an exchange, or if you just want to get access to this course, then make sure to sign up for Phemex with the link in the description box down below. I hope you guys enjoyed today's video. If you did, make sure to hit that like button, subscribe to the channel, stay tuned for more content. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.